AI stocks just flipped again. Google and Broadcom are surging while Nvidia is starting to fall behind. Today, I'll show you exactly why this reversal is happening, the 3 stocks now leading the AI trade, and what I'm personally doing after this massive shift. So what happened? Well, if we sort by the biggest gainers on my watch list today, we have Broadcom up 11.52% just today. Tesla is up 6.86%. And Alphabet, the parent company of Google, is up 6.34%. Meanwhile, if we scroll down, you can see that other big AI stocks like Nvidia are only up 1.3%. And if we take a deeper look at Nvidia, it's actually sold off quite a bit from its all-time high. And despite crushing earnings last week, it's down 2% over the past 5 days. And it's down 2.5% over the past month. So what's going on? Why is Google hitting all-time highs? Why is Broadcom stock surging when Nvidia is not? And why is Tesla stock also surging at the same time? Now, the interesting thing is that all of this is connected more than you think. This flip of the AI trade is something I've been waiting on. As many of you know, I bought into Google in 2025, and so far that's been almost a 100% total return, nearly $30,000 in gains. And longtime viewers know that in my growth-focused portfolio, Tesla is my largest position, and it's actually my largest holding overall. I've been able to buy on dips multiple times throughout the years when, let's just say, there is some negative perceptions around the company. This has resulted in a $66,000 gain. And while Tesla remains more speculative in terms of valuation over the long term, Google very much did not. It was deeply undervalued this year, and the market simply was not understanding that it is the leading AI company in the world, while still having a fantastic, dominant business that generates tons of cash. Google is in a fantastic position, and the market's starting to realize it. Quick note before I get into each winning tech stock. Everything I'm going to show you today, the stock analysis, the portfolio tracking, the AI research assistant, this is all available on dividenddata.com. And we currently have our Black Friday sale live where you can lock in 50% off annual membership and keep that discount price for life. There's a 30-day money-back guarantee, so try it out at no risk. The link is in the description and pinned comment of the video. All right, so let's start with Google. Why is the stock at all-time highs? Before I get to the launch of Gemini 3 and the specific AI-related reasons why Google stock is up, we have to emphasize that we're investing in businesses, and the business of Google is on fire. They just hit an all-time high in earnings per share, and they have a long track record of high earnings growth. Analysts are also projecting double-digit earnings per share growth in the coming years. Alphabet has seen revenue per share growing at a 5-year compound annual growth rate of 19.45%. Net income per share has grown at a 5-year CAGR of 26.8%. Free cash flow likewise has a 5-year compound annual growth rate of 21.44%. While this has slowed down in recent years due to expanding capital expenditures, and that's part of the AI data center build out. I've talked about this a lot in my prior videos, so please go watch that if you want a full deep dive into my thoughts around the CapEx spend. Alphabet has an incredibly high margin business with 58% gross margins, 28% net margins. And really another way to look at this is the Google search business itself is the cash cow, and these margins would be a lot higher if that was their only business. But Google has been using the cash cow of Google search and the related advertising revenue in order to fund all of their other businesses, in this case, AI. Previously, they did that with Google Cloud, and that business has now become incredibly profitable, and it's become one of the pillars of Google. As you can see, their quarterly revenue since 2020 has gone from $2.6 billion all the way to $15.1 billion, and operating income has gone from negative $1.1 billion a quarter. And now Google Cloud is generating over $3.5 billion a quarter. Oh, and by the way, if you're wondering how I'm getting all this information, secret projects I'm working on, more information next month. Sign up for our Black Friday sale if you want to be the first to know about it. The Google Cash machine, though, has built up a fantastic balance sheet for Google. They have shareholder equity of $386 billion, $98.4 billion of cash on hand, and negative $64.7 billion net debt. So the financial strength of Google is in a fantastic place. And when you start to compare this to some of the other model companies, whether it's OpenAI, Anthropic, or even xAI, there is a clear business advantage going on here. But as we dive in to do more research, it becomes obvious that Google actually has a lot of advantages in AI and might be considered the leader and probably should be the betting favorite. They just released Gemini 3 and it's the top of the charts at this time. By pretty much every benchmark, Gemini 3 is the best AI model right now. And Google has a lot of inherent advantages that may allow it to keep the top spot. Also, a big thing to point out here with the AI trade flipping, Gemini 3, which is the best AI model in the world, was not trained using NVIDIA. It was using Google's own chips, the TPUs or tensor processing units. And this potentially highlights a big trend going on in AI. And the market is starting to realize this, hence why Google stock went up a ton. And as I'll soon explain, partly why Broadcom and Tesla went up a lot as well. But before you get too excited about Google having the best AI right now, that will probably change in a matter of weeks to months. If you spend a lot of time online, you've probably seen this meme or some variation of it where basically there's just a cycle of all the different AI labs releasing their new models, and we just cycle through which one's the best at any time. So the real winner in the end will likely be the company that can play the longest. And that will be the person with the best business. And Google has a ton of advantages. We already talked about the financial side of it, but they have an incredibly large product ecosystem that allows them to deploy their AI to a lot of users. The Gemini app already has 650 million monthly active users, and more than 13 million developers have used the model. And this is not even counting Google Search, where they're integrating AI overviews. In fact, over 2 billion Google Search users have already interacted with AI overviews. They also just added AI mode to Google Search. And when you consider Google Search, YouTube, the Gemini app, Google Workspace, including things like Google Docs and Google Sheets, other applications they're working on like Notebook LM, Google Anti-Gravity, which just launched. When you consider Google's entire ecosystem, they have a clear distribution advantage as well. And there are only a few companies in the world that even remotely come close. And while for now, ChatGPT does have more monthly active users in their AI-specific app and likely more usage per user, when you consider Google's entire ecosystem, they're in a very good position. And there is a lot of room to keep growing. Google has also been in the AI game for 15 to 10 years now. They were leading the charge in this. So the reason why Google stock is hitting all-time highs, yes, it's because they have a great business, but the market's quite excited about that they just had the best AI model and that it was trained on their hardware. That is a crucial point, and that gets us to our next stock we're going to discuss, which is Broadcom. Broadcom is up 11% today, and that is because of the news related to the Google TPU. The market is seeing that people will want to diversify away from NVIDIA and will want either their own chips or another provider. And Broadcom is the key company helping people build their AI chips with custom ASICs. If you don't know, Broadcom is actually Google's partner to help them design their own chips. And this has been going on for about a decade at this point. Broadcom's projected to exceed $10 billion in revenue from Google's TPU program alone in 2025. And they have an estimated 75% market share in custom ASIC AI accelerators. And the reason why this matters for a company like Google is that they can avoid paying such a high margin to a company like NVIDIA. NVIDIA has 73% gross margins. That is a huge tax, and given the fact that all of these major AI companies are spending tens of billions of dollars with NVIDIA, they're going to want to find ways to potentially reduce that, or at a minimum, reduce their dependence. Now, luckily, Google has been in the game a long time, so they're already in a position to do that. This is leading to fantastic stock results, though, for Broadcom. As you can see, the stock price is up 129% just this year, and 613% over the past 3 years. However, many of you long-term viewers know that I have been concerned with the fact that this was a small portion of Broadcom's overall business compared to something like NVIDIA, where it was their entire business. So the actual growth in fundamentals at Broadcom has not been as significant. It wasn't until last year that it actually started growing the overall business of Broadcom. But the AI-related revenue is starting to become a larger and larger part of the pie. In the latest quarter, AI semiconductor revenue for Broadcom reached $5.2 billion. That was a 63% increase year over year, and they have had 10 consecutive quarters of high growth. They're expecting $6.2 billion in Q4 2025, which will be a 66% increase year over year. And Broadcom is in early conversations with a few very large customers. It's rumored to be OpenAI and Meta. And a new customer placed production orders securing over $10 billion worth of AI chips based on Broadcom's XPUs. That's what they call their AI accelerator chips. So as we stand today, the AI-related stock market has flipped, and it is seeing the trend flip towards both Google and Broadcom. The other tech stock up big today, and it's actually due to related news, is Tesla. It's up 6.75%. And if you did not know, Tesla actually designs their own chips as well. And that's not via Broadcom. They have a very large internal team, and they've been developing chips for quite a while. This has actually been a secret project Elon Musk has been working on for 6 months over at Tesla. He said he was working nights and weekends. And I know some of you value investors, you're probably thinking Tesla is a car company. They're a technology company and one of the best ones in the world. The key growth drivers for the future are self-driving. They're going to have a self-driving taxi network already in the early stages of launching that. And then robotics have been outlined as being the next key growth driver after that. And we're still a few years away from that being economically notable. But that is part of Tesla's valuation right now. It's a lot of future expectations, which is why the stock is very volatile and sometimes trades at a premium. And then other times when sentiment is not there, it crashes, which for the long-term investor can present opportunities. But back to the AI5 chip. It's designed to be 40 times more powerful than the current AI4 chip used in Tesla vehicles since 2024. And starting in the end of 2026, this chip is going to be in all new Tesla cars. And this chip and future generations of it are also going to be in the Tesla bot. Tesla's manufacturing this with TSMC and Samsung. So they're using a dual foundry strategy because they actually have to generate such a high supply that they can't do it with one supplier. At the latest Tesla Investor Day, Elon actually mentioned that he is considering building their own fabs because he views TSMC and Samsung's future expansions as being one of the bottlenecks in the growth of their related AI businesses. This is similar to how they got into battery manufacturing because that was a bottleneck in their supply chain. This chip is specifically designed for inference, which would be the usage of AI, not the training. So it makes it very good for the application layer products, so things like the self-driving cars and the Optimus robot. And this is where I'll start to tie it all together again, which is where the long-term growth in AI-related tech stocks will accrue to. Where will the value be? So far, the value has really accrued to NVIDIA. And that's because of the old analogy. They're the ones selling the picks and shovels in the gold rush. And that has led to insane earnings per share growth over at NVIDIA. And by the way, I think that's expected to continue. If you want my thoughts on NVIDIA, I did a video last week about it after their earnings. You could definitely make the argument that the market is slightly undervaluing them here as well. But in the multi-decade view, I don't think the most valuable company in the world will be NVIDIA. It will not be the chip providers. It will be the companies that actually provide products and services in the real world using AI. And I think it will actually be similar to the internet where potentially there could be some bubbles along the way. But right now, we're not even properly scaling in how big the market will be for AI when we're talking 10, 20, 30, 40, 50 years out. The internet led the foundation for some of the best businesses in the world, things like Google. And I think it's clear that Google will be one of those companies creating value with AI for the decades to come. They also have a play in self-driving with Waymo. That is one application of AI providing value in the real world. Tesla with self-driving, that's another example. And then also their plans with the Optimus robotics program. And these are just a couple examples related to the stocks I'm talking about in this video. So as we look at the AI market today, NVIDIA is not dead, but the market is finally giving Google its credit as being a top player. And it is also recognizing that NVIDIA won't have a monopoly on AI chips for the long term. But that doesn't mean they can't continue to grow at a high rate well into the future. NVIDIA's latest earnings report would beg to differ. So as you see Google, Broadcom, and Tesla surging right now, I would not get too elated. Remain cautious. There will be plenty more buying opportunities in the future. Right now, the market sentiment is very positive in that direction, especially after everyone is realizing that the most powerful AI model right now is trained not on NVIDIA, on the Google TPUs. That narrative is basically guaranteed to change in a few weeks or months. So I would definitely say hold your winners here. That's what I'm doing. I'm holding my Google stock. I'm holding my Tesla stock. But I likely will not be adding again until we see some sort of sell-off. So with that said, I hope you enjoyed this video. Leave a like, comment, and subscribe to the channel. And if you want to use the stock research tool I showed throughout, it's all available at dividenddata.com. We have our Black Friday sale where you can lock in 50% off annual membership, and you can keep that discount price for life. The link is in the description and pinned comment of the video. With that said, I'll see you in the next one.